Hi viewers, welcome back to my YouTube channel. So we are on the website of bankrate.com, and on this bankrate.com we are about to learn about a new blog about cryptocurrency taxes, a guide to tax rules for Bitcoin, Ethereum and more. Let's find out, we all need it. With the staggering rise and fall of some cryptocurrencies such as Bitcoin and Ethereum, crypto traders may have may have serious tax questions on their minds. The Internal Revenue Service (IRS) is stepping up to enforcement efforts, and even those who hold the currency, let alone trade it, need to make sure they don't run afoul of the law. That might be easier to do than you think, given how the IRS treats, okay, cryptocurrency. It's a really big enforcement area for the IRS right now, says Brian R. Harris, tax attorney at Fogarty Mueller Harris, PLLC in Tampa. Okay, they are generating a lot of publicity in going after people who hold, trade, or use cryptocurrency. Those people can be a target for audit or compliance verification. While one of the selling points of Bitcoin, for example, has been its anonymity, or at least semi-anonymity, authorities have been paying catch up in recent years with some, success featured investing products as of October. You can see for this later, but I want to read this. Okay, so the IRS and FBI are getting better at tracking and tracing Bitcoin as part of criminal investigations, says Harris, and they can freeze assets if needed. He adds, it's all the all the more reason for those who transact in popular currencies to know the laws and warn taxes they might incur by their actions. The good news, IRS generally treats cryptocurrencies similarly to how it treats other capital assets such as stocks and bonds. The bad news is the treatment makes it difficult to use cryptocurrencies to buy goods and services. Here are the number of the key things you need to know about the current cryptocurrencies, taxes, and how to stay on those topics covered in this page. We can read one by one simultaneously. 8 important things to know about crypto taxes. Number one, you will be asked whether you owned or used cryptocurrency. Your tax return, requires you to state whether you have transacted in cryptocurrency in a clear space near the top from 1040 asks whether taxpayers received, sold, sent, exchanged, gifted, or otherwise disposed of a digital asset at any time in the tax year. So you are on the hook to answer uh, definitively whether you have transacted in cryptocurrency, putting you in a position to potentially lie to the IRS. If you don't answer honestly, you could be in further legal jeopardy, and the IRS does not look kindly on the liars and tax cheats. However, most US crypto owners haven't reported their activities to the IRS, according to a recent study by DLVLY, a company focused on easing the burden of crypto taxation. Only an estimated 1.62% of the US crypto owners reported their holdings to the IRS in 2022. However, there is a footnote in a clarification. The IRS said that taxpayers who only purchased virtual currency with real currency, we were not obligated to answer yes to the question. You don't escape being taxed just being you didn't get a 1099. With a bank or brokerage and the IRS will typically get a Form 1099 reporting the income you have received during the year. They may be that may be that may not be case with cryptocurrency. However, this isn't really the same level of reporting for yet for cryptocurrencies relatively to typical 1099 forms for stocks, interest, and other payments, says Harris. The IRS does not get great reporting from Coinbase and other exchanges. However, a November 2021 law was supposed to require greater tax reportings for those in the industry starting from January 2023. The law requires brokers, including controversially anymore those move digital who moves digital assets for another to report that into the IRS on a 1099 similar form. Opponents say the law would require anyone who's who moves cryptocurrency, including miners and crypto or wallets, to follow the new rules, including those who have no access to that information. So lawmakers have delayed the implementation of the rule as they work to more narrowly define who it applies to. But the lack of a 1099 won't let you escape any tax liability, and you will still have to report your gains and pay tax on them. Still, it's not the bad news. If you had to take a capital loss, you can deduct that on your return and reduce your taxable income. So, guys, this is more on this website. Number three is just using crypto exposes you to potential tax liabilities and everything about this website. You can go for this and find out more. See you soon in the next video. Then subscribe my channel, press the bell icon for more updates. Bye bye. Take care.